Hey guys, welcome to another episode of 10-Minute Trades. Today we are going to be taking a look at Qualcomm, ticker symbol QCOM. Just taking a look at its trading today. Trading for about $117, was actually down almost 1% today. So let's just get right into it. You know, the first thing I like to do is look at Fibonacci Retracements. Again, this is a daily chart, so each candle represents 1 day of trading. We're going to zoom in a little bit. And I always like to draw my Fibonacci retracements lately from the recent lows right around peak illness to the most recent highs. So let's draw a fib from about March 18th all the way up to September 2nd here. And that's going to be this. And right off the bat, we can already see this 23.6% Fibonacci level at about 109 is looking like an area of initially resistance and then support. You can see a bunch of times candles or wicks have come close to it and have bounced off it. So we'll take a look at that. Let's get right into drawing some trend lines here. And the first trend line I identified was actually not really a trend line itself, but more of a gap. You can see from July 29th to the next trading day on July 30th, Qualcomm gapped up pretty hard. I mean, it gapped up from about $94 to about $100. So we have a $6 wide gap here that needs to get filled at some point. I mean, if I scroll out, you can see there's really no historical data out in that range. Now, the interesting thing is this 94 level, it's also an area of resistance because as you can see, this trading days back in early July and also end of July have bounced off to the downside of 94. If we go back in time, back in January of this year, it was also an area of resistance. We kind of broke above it, but then 2 days right after we sold off right down below it. And then also again back in November of last year, so almost a year ago, it seems that $94 was a strong area of resistance for quite some time. We finally gapped up above it this year, but it's going to act as an area of support now that we're above it. Now, this other trend line is kind of no man's land. This is just the top of the gap here at about $100, and this is kind of a scary setup for me, and I'll tell you why. So let's keep working on some trend lines here. I identified a trend line here, which I think is an area of support at around 109. Now, I was debating, is it 109 or 108? Because, you know, we have these wicks and these candles here, this candle here, these wicks here, then you have the tops of these candles here. So I was like, okay, am I going to draw it down here around like 108 and some change, or more higher up around 109? At the end of the day, it doesn't matter too much because, again, these trend lines are not exact. They're more areas. So I'm going to call this somewhere around 108, 109. And like I said earlier, this 23.6% Fibonacci level is right at 108, 109 as well. So I think this is going to be a strong area of support right now. We have the fib level there. We have a trend line because we see multiple times candles have kind of bounced off that trend line. So I think this is going to be a strong area of our support most recently because we're currently trading at 117. So let's keep going. I think the area of resistance right now is right where we are at about 118. So we can see here on August 27th and August 28th, this wick touched it, came back down. This candle closed right there. We were able to break above it, but then we kind of came right back down. Then again, September 4th, intraday, this wick touched it as well, but couldn't hold it. Same thing on September 15th. And then September 16th, we touched it and then sold off past it. Yesterday, we did close just above it, but as we can see, the stock didn't like that because it sold off today and closed right below it. So I think right now, Qualcomm is going to trade in this range between about 109 and 119, this $10 wide range. The other interesting thing is that the 21-day moving average, which is this orange line, is right here at about 115, and the 50-day moving average is right there about 110. So this could also act as an area of support. As you can see yesterday, intraday, it bounced right up off the 21-day moving average. So I think on a closer level, I would suspect Qualcomm to trade between about 115 and 118 until it decides to break either below or up to determine where it's going to go next. But then the next area of support is probably going to be wherever this 50-day moving average is, which I would guess to be around maybe 112, 113-ish, depending on how long it takes to get there. But then after that, I am going to be looking at this 109, 108 trend and Fibonacci level as a strong area of support. I said I'm scared with this ticker because if we break below 109, I don't really see any area of support below 109 because there's not a lot of data there. And again, historically, we've never traded in that range. So I think from about $94 to $109 is pretty much no man's land. My fear would be if Qualcomm broke below 109, there's nothing stopping it from going all the way down to 94. So if you were going to sell cash secured puts in this area and Qualcomm decides to sell off, I strongly think that you're going to get assigned shares. And it's just a question of how bad are you going to be in the money. Again, if you were looking at maybe buying shares, I would love and just be patient and just wait till Qualcomm tries to trade in this range. Because like I said, I think once or if it breaks below 109, it's going to get down to the 90s, I think. There's nothing holding it back. But we'll have to wait and see. Let's keep working on some more trend lines here. So I identified this trend line here at about $87. And historically, you can see there's a trend line here. A bunch of wicks and candles kind of bounced off it initially back in July and June of this year. And if we go back, also it was actually an area of support back in December of last year and January, February of this year. So I think this is another strong area of support if we get down to the 90s. Another area of support further down is going to be about $74 because again, back early this year in April, looks like a few times we had some candles and wicks bounce up off this. And then also before the illness really took off in February, we had some candles bouncing off that as well. So I think 74 is another area of support, but we've got a ways to go before we get there. Another trend line kind of between the two is going to be at about $82. And again, while we were trading in the 70s, it seemed as though 82-ish was an area of resistance. You can see a few candle wicks tried to break above it. And then even if we go back in time, it was an area of support back in February of this year. And also back in last year, in October and September here. And actually as far as back as July. So one more trend line, actually two more I should say, all the way down here, I think at $70. There's probably a fairly weak area of support. You can see back in 2019, there were some candles here. Most recently during kind of the peak illness season, there was a little bit of resistance there. So the last trend line I identified is all the way down here at about $64. Similar reasons, a little bit of a resistance when we kind of broke down below it in March of this year. We bounced off it in May of last year. And then also all the way back, if we truly go back to November, October 2018, you can see there are a few candles here that tried to break above it but couldn't. It was an area of resistance at that time. So right now, currently where we're trading at about 117, I think we are at the upper limits of resistance. I think the resistance is about 118 right where we are. I think the closest area of support is going to be about 115 where this 21-day MA is. Next will be about 111, 112, 113, wherever this 50-day moving average ends up. And then I think the strongest area of support is going to be about 108, 109. And as I said, if it breaks below that, it's going to be a lookout below because I think it's going to drop all the way to the low 90s at least because this seems like a bit of a no man's land area. As far as the overall trend, it is obviously trending up because if I draw a trend line, again, from the recent lows to the recent highs, I get a line like this. I drew it from the bottom of these wicks, tried to incorporate some of the bases of these candles as I went up. And as we can see, we were a little bit oversold or overvalued, I thought, back in August and September of this year. We've kind of come back down to earth, trading closer to the moving averages and also this trend line. You can see most recently, again, we were green yesterday, pulled back again today. Now, if you don't believe in this trend line or you want more evidence, I also drew a parallel channel here. Again, pretty much mimicking the trend line, but then the top of the channel is going to be the tops of some of these candles here. And again, you can see back in August and September, we were trading above this parallel channel, which is again why I think we were a little bit overvalued. And also the RSI supports that. You can see we were above the 70 or very close to the 70 RSI, suggesting we were overbought. You know, the one nice thing is right now we are trading right in the middle of this parallel channel. So it's good and bad because I don't think we're really overbought. I don't think we're really oversold. But since we're in the middle, we'll have to wait and see exactly where Qualcomm wants to go from there. Because it could go up, it could go down. My guess would be it's going to bounce to the downside because as of right now, it seems that 118 is a strong area of resistance. And like I said, support is about a few bucks to the downside. So we'll have to wait and see what happens. But that is my trade analysis on Qualcomm. Let me know in the YouTube comments if you agree or disagree. Let me know what ticker you want me to look at next. As always, if you have any questions or comments, leave them below. Join our Discord server, and happy trading.